Hello, everybody. Happy Wednesday. Welcome to another webinar Wednesday at Collective. I'm gonna let a few more people join in, but if you're so inclined, I got a question for you in the chat. First, I'd like to know where you're calling from, but what holidays do you celebrate coming up soon? And have you started decorating yet? What holiday do you celebrate that's coming up soon? And have you started decorating yet? I completely swapped out Halloween for Christmas, and we're just gonna skip the pumpkin season. Oklahoma, no decorating yet. Ellen, that is restraint. Where's everyone else calling from? And what are you celebrating this year? And have you started decorating yet? When is it too early to start decorating? Texas, Thanksgiving. Yep, we're thinking about Thanksgiving and eating. Heck yeah. Planning the menu, not decorating yet. Tammy's decorating. I love it. Earlene, hi from Tampa. Sarah, New Mexico, nothing yet. You can celebrate the cold weather also. I think that's something to celebrate. Winter solstice, I love it. There's something so refreshing about the cold air for me, so I do look forward to this time of year. Hannah's decorating your soul. I love it. I love it. Thank you for bringing that energy to a tax talk. We need this. We'll give folks another couple minutes. Linda from Mississippi, going out of town for Thanksgiving. I love it. Well, welcome everybody. It looks like we're representing a good part of the country and a handful of different types of celebrations. Today, we're going to pivot to something that's less exciting and talk about last minute tax moves when you're self-employed. So if you've been to one of these sessions in the recent months, we shortened the presentation section. So we're going to do 10 minutes on some slides and then pivot over to live Q&A. So feel free to keep the chatter in the chat, but there's also a Q&A box in Zoom. If you've got questions that come up throughout the session, feel free to drop your questions in. They can be related to anything about self-employment. This session, we're focusing on year-end tasks and year-end opportunities. There are no bad questions here. So we're going to dive in. We're going to get started. Looks like we got a small but mighty group today. So highly encourage the participation and the questions. We are going to talk about a couple things, understanding end of year deductions. So you might have seen a lot of lists of very common deductions, but what are some that you might not think about? What are the retirement contribution options for closing out the year? When do you need to contribute by? A last minute opportunity to close out your Q4 estimated taxes, and then we'll pivot over to the Q&A. Real quick about Collective, we like to keep this short. Collective is an all-in-one solution specifically made for self-employed people. We bundle together everything you need to stay on top of your finances. So monthly bookkeeping, if you're an S-Corp owner, we run payroll for you as the S-Corp owner, and then we help you prepare and file your business tax return. This webinar is for educational purposes only. Nothing contained in this presentation should be construed as legal or tax advice. Always consider consulting a professional if you need legal or tax advice in operating your freelance business. I was just on a plane, so I feel like I said that in a flight attendant voice in my head. All right, here we go. Understanding end of year deductions. So what opportunities are there at year end? You might have seen lists, common business deductions, marketing, office supplies. Those are deductible throughout the year. So we really want to use this slide to highlight what can you do in the last couple months that you might have not been thinking about. So one of the first ones, lock in deductions before 12/31. Most of us who are self-employed report our taxes on what's called a cash basis, meaning you report income and expenses when you actually receive or pay them versus like some kind of accrual or deferral. So you get to count the expense when it actually happens, which means it needs to be made before December 31st. So what are some big opportunities that might not be routine in the normal course of the year, replacing outdated equipment. Maybe you're a podcast host and you've got a really old mic. Maybe it's time for a new mic before year ends. Maybe you never set up your home office, so it's time for an ergonomic desk chair. Maybe you can consider paying contractors early. So if you've got some outstanding invoices or contractors that you have yet to pay them early before December 31st to capture that deduction for the 2025 tax year. Another opportunity is renewing annual subscriptions. So sometimes if you pay for a year in advance, we do this here at Collective, you get a discount, and it means you usually pay in a lump sum. Sometimes those lump sum payments result in larger write-offs. So if you are due for an annual subscription renewal, that could be an opportunity to move the needle a little bit more in a bigger ticket deduction. Think beyond the basics. So what are some other things that can come out of your business? Maybe you have your eye on a LinkedIn learning course or some kind of certification or continuing education. Those are opportunities that can become deductible if they support you generating revenue for your business. It's the end of year. Gifting is top of mind for a lot of people. If you want to give out business gifts to your clients, the IRS does have some limitations on gifting. But generally, if you keep it under 25 bucks per recipient, that can become deductible. And then charitable contributions. If you have an S Corp or you're a Schedule C filer set up as a single member LLC, you can make charitable contributions through your business. The way they're deducted varies just depending on how you file your personal tax return. But just note, if you're charitably inclined, charitable donations can be made through your S Corp, through your personal business account, and then they may become deductible if you itemize. I see a couple questions in the chat. Helene, if you are a C Corp, is this for me? C Corp, unfortunately, Collective doesn't support C Corps, but if you want some general information about what's deductible, it may apply, but this is specific to single member LLCs or single owned S Corps. And then there are a couple other questions in the chat. If you don't mind moving them to the Q&A, just so we don't miss them. So retirement opportunities for being self-employed. Specifically, there are a number of different types of retirement plans. This is not an inclusive list or an exhaustive list. We're really focusing on pre-tax deductions and the ones that move the needle the most. So, missing from this chart is a traditional IRA, Roth IRA, Roth 401k, all of which can be great opportunities to put money aside for later. Maybe they become deductible. But we're really focusing on these two specific structures. They're both pre-tax retirement plans. And we're calling them out specifically because they have higher contribution limits. And so generally, when there's a higher contribution limit for a pre-tax retirement plan, it means it can yield a larger deduction. It's going to move the needle potentially a lot more than maybe a traditional IRA where it's got, like $6,500 of a max contribution limit. So really the distinction in these two plans, they're available for both a single member LLC, sole proprietor, or a single owned S Corp. The reason they're advantageous, again, is they're pre-tax, which means when the year that you make the contribution, it'll reduce your taxable wage or reduce your taxable income. And then you'll pay tax on it upon retirement when you take it out. So you get a deduction in the year that you contribute. Who can contribute varies. The solo 401k is attractive because it allows for both an employee and an employer contribution. You wear two hats when you're an S Corp owner. Both sides of that contribution become deductible. The main thing I want to call out here, specifically if you've got a solo 401k, this is most commonly used when you're set up as a single owned S Corp, where you are an employee, you pay yourself a reasonable salary, and then you're also your own employer. As the employee under a solo 401k, there is a deadline to submit your employee portion of your 401k retirement contribution by December 31st. So the IRS under a solo 401k allows you as the employee up to $23,500, this is adjusted annually, that you can make as a pre-tax contribution to retirement. There's no limit on your salary or income. It's just a straight up $23,500 that you can contribute as the employee. And that is due by December 31st. The nice thing about both of these retirement plans is there are opportunities to still contribute for the 2025 tax year beyond December 31st, but it depends on if you're structured as a SEP IRA or if it's the employer portion of a solo 401k. So TLDR, if you have a solo 401k, the employee portion of the contribution is due by December 31st. And this last bit is not about reducing your taxable income. This is about how can you alleviate what you might owe in April, which is still a great opportunity to manage cash flow, especially if you buy a lot of gifts around the holiday season or plan, future vacations. Understanding what this Q4 impact can do for what's due in April will be substantial. So if you've been paying quarterly estimated taxes throughout the year, Q4, which is due in January, is your last chance to kind of true up or pay into safe harbor for what you might owe in April. So here are some tips. Review what you've paid so far. Tally up any Q1 through Q3 estimated payments you've made for 2025, both federal and state. And then if you're on salary, whether it's through your S Corp or maybe you have another salaried role or your partner works, you'll also want to include those withholdings, both federal and state. And we're totaling up everything that you've paid into your tax bill so far this year. So first, let's understand how much you've paid in. Second is maybe Q4 is a great opportunity to do a more robust calculation because you've closed out or almost completed your 2025 books. You've got 12 months of revenue, maybe 12 months of expenses that you've already captured. So maybe Q4 is a good opportunity to do a more robust calculation and guess what your 2025 tax liability might be. And then you can compare that between, the most trued up calculation of your tax bill compared to what you've paid in so far. That could reveal maybe a gap or maybe an overpayment. So if there's a gap, this can be an opportunity to catch up a quarterly estimate. Maybe you skipped Q2, which is totally fine. Q4, you can make up a skipped payment. Maybe you haven't paid anything in so far. Q4, you can use that opportunity to pay in anything that you might have missed. The last thing is maybe if you've done all these calculations, you've determined I should make one more payment, you can submit this Q4 estimated tax payment by January 15th. What's the whole point of this? Paying in quarterly helps alleviate what you might owe in April. The intention is to pay into your tax bill throughout the year, kind of like to mimic withholdings through a regular job. When you're self-employed, there's typically no means to do withholdings besides the estimated taxes. So we're really trying to pay in to get really close or owe or refund a small amount by April 15th. And that's it for our short presentation. We're going to switch to a really quick poll. And I see 9 questions in the Q&A. I highly encourage more. They don't have to be specific to year-end tasks. They can be anything related to self-employment. I'm going to check the chat real quick while we do this poll. And if you put a question in the chat, kindly ask you to move it to the Q&A just so we don't miss it. Mildred, yes. A recording of this session will be sent to you after the session. We also post these on YouTube. So if you want to watch any of the prior webinars that we've hosted, they are all freely available on YouTube. All right, we're going to give it a couple more seconds on the poll. And before we switch over to Q&A, I'm going to turn off screen share, but this QR code is going to stay up on the background of our screen. If you're interested in talking to Collective about whether or not an S Corp might fit your business needs, or if we're the right fit to help support your self-employed business, you can scan this QR code. It's going to take you to a short questionnaire to see if Collective is the right fit. And then ultimately, we can help you get started with Collective if we are the right fit. We help with business formation. So if you need your LLC set up, we'll file the S Corp election for you if that's the right fit for your needs. We do monthly bookkeeping, so it comes with an accounting subscription. Payroll is included for S Corp owners, and then we'll prepare and file your tax returns at year end. So if this is something that you're looking for, an all-in-one solution, one app, one fee, feel free to scan this code, and there is a discount code that we'll put in the chat as well. And I'm going to turn off this screen. Don't worry, the QR code's going to stay on. And we're going to move over Q&A. 16 questions. Thank you. Thank you. Okay, Austin is asking, how does matching 401k contributions help or hurt? So if you're talking about a 401k for you as your own S Corp owner, your S Corp can do a matching contribution. So you as the employee can do up to the 23.5. The S Corp can do a matching profit sharing contribution up to 25% of your wage, I believe. That just becomes a straight up business deduction. Generally, the employer contribution, which is usually the matching side, is not due until you file that business tax return. So if it's an S Corp, it's not due till March 15th. It can follow the extended deadlines. So there's a lot of cushion for making the employer matching contribution. In terms of does it hurt? If you've got cash flow issues and it's more advantageous for you to have cash, maybe in that instance it hurts. But again, 401ks are pre-tax deductions. Any matching is a deduction for the business. Hannah, I'm interested in the solo 401k, Roth, and traditional. So these are all great options. You can actually combine traditional Roth 401k. We don't have our own plan, but we do have some partners that we work with that can help you set up either of any of these plans. Usually with collective members, we recommend they choose a provider that they like, Vanguard, Fidelity. It doesn't matter. You can open a 401k under your tax ID most likely, and then maybe link it to your payroll. Those are things that collective can help with, but usually you initiate opening the account with the provider of your choosing. Are you going to cover solo 401k versus SEP IRA? I'm going to be honest with you, I'm not a financial advisor. So going beyond kind of the high level is beyond my level of expertise, but we do have some partners who can speak to this. And it's something that we get questions about often. So anonymous attendee, thank you for calling it out. We will put together some more education on this. Generally, we talk about who is a better fit for either. We more often see the solo 401k with the S Corp and a SEP IRA with a single member LLC who files on their personal return. They do have some different deadlines to contribute, and there's similar contribution limits, but the way you contribute varies, mostly between who's contributing. So is it you as a self-employed individual, or is it you as an employee versus you as an employer? So those are kind of the high level themes, but we can definitely get a focus session on the difference. Jess is asking, any suggestions for purchasing health insurance as a solo consultant in 2026, given the new rates and increases? Yes, ACA subsidies. Could becoming an S Corp help? Any options where freelancers can buy into a group policy together? Jess, we have a great referral for this. It's called HGB Solo. Let's see if I can figure out how to get an attachment to the email that we'll send after this. There are options. We're working on some partnerships to find the best solutions. But yes, this is something we're thinking about with the increase and the changes to ACA, and we can get you a referral. Anonymous attendee, what if you pay a child for part-time work? Are you still eligible? So if you pay your child or anybody, just make sure that it's a fair and reasonable wage. You document that it's for a true business purpose. How you pay them, whether they're on payroll or salary, like running through a formal payroll process, or it's 1099. In either instance, if it's a legitimate business deduction with a true business purpose, and you're paying them a fair and reasonable wage, that's something to call out when you're employing family members, it's totally deductible. So just document the business purpose, the way you came up with their rate. Make sure that you're filling out all the proper payroll forms if they're on salary versus 1099. But generally, a payment to your child would become deductible. Isn't the solo 401k also available for a sole prop? Hannah's asking. Yes. So again, I'll just level with you. This is where my area of expertise is a little bit vague. But solo 401k can work for a sole proprietor, single member LLC as well. It just may adopt some of the contribution limit calculations that are more similar to a SEP because you're not wearing the two hats as a sole proprietor. You're not an employer and an employee. So who contributes may vary slightly, but I would defer to a focus session on retirement, which we can put together. For a single-owned S Corp, can my business pay my health insurance premium from the business account and be a deduction? In general, yes. If you're an S Corp owner, your health insurance premiums for you and your partner and dependents can become deductible. In terms of how to pay it, I'm a little bit rusty here. I'm gonna defer to some of my colleagues and get the right answer. Generally, yes, it's deductible, whether it comes directly out of the business bank account or personal. If it's personal, it may need to be recorded onto your books or onto your wage as a benefit. But generally, yes, it's deductible. Where it comes from, let me get back to you on that one. 15 questions were going up. Thank you. Jade, can you open a 401k to reduce your taxable income if your income is not steady or if you're not making as much in the year? To my understanding, there are not limits to opening a 401k. You may need to have some kind of separate tax ID. So even if you're a sole proprietor, maybe you need a sole proprietor EIN. If it's under an LLC or S Corp, you may need an EIN, but I don't believe that there are income limits. But I would defer to a focus session that, again, is becoming more clear we need to put together. So Jade and others, thank you for the questions on retirement. Karen, please address whether S Corp and self-employed are equivalent for employee contributions to taxes. Please address whether S Corp and self-employed are equivalent. Okay, so S Corps can be owned by up to 100 shareholders. Collective specifically focuses on single-owned S Corps. And when you're the owner of an S Corp, you are still considered self-employed because you're the owner of that S Corp. You are both the employer and employee. When you're self-employed in like the most basic sense, it could mean that you're a sole proprietor, whether you have a single member LLC or sole proprietorship, maybe you file on your personal tax return. So the distinction between the two, an S Corp and self-employed, you're all self-employed. If you own the S Corp, it's your own company. The difference may be on how you're filing the taxes. So for sole proprietors or single member LLCs, your business activity gets grouped to your personal tax return. Simple, you file Schedule C, and it's all lumped into one filing every year. And then you pay self-employment tax on that business profit. So it's made up of Social Security and Medicare. That's that 15% self-employment tax. Under the S Corp, it's the same business activity, but it's now reported on its own standalone business tax return that ultimately passes through to your personal filing. So in either instance, you as the business owner are still the ultimate taxpayer. It's just the tax reporting is a little bit different, where the S Corp requires you to, file a separate business tax return. Under that structure, you still pay Social Security and Medicare tax. It's just now called payroll tax under that structure because you now only pay it on payroll instead of on your entire profit. In terms of employee contribution to taxes, again, you'll still pay income tax, whether you're set up as an S Corp or sole proprietor or single member LLC. Income tax is assessed on your entire profit plus household income. The main difference in taxes is how you pay into self-employment. So S Corp, it's referred to as payroll tax only on your wage. If you're a sole proprietor or single member LLC, you pay self-employment tax on your entire profit. Karen, I hope that's what you were asking. If you were referring to retirement contributions, I may have missed that. What if you pay a child for part-time work? Are you still eligible for solo 401k? It depends on how you pay the child. So generally under a solo 401k, you and potentially your married partner would be the only two people eligible to be on payroll. So a child may constitute a third employee and a non-eligible employee to be a solo 401k. You may be able to have a regular 401k, and there may be some limits on, whether that benefit is available to all employees or not. But my understanding is that a solo 401k can only have you, the business owner, and potentially a married partner um, on salary. Anonymous attendee, can I still elect S Corp status even if I've been a single member LLC? The IRS has a late relief process for electing if you want to do a 2025 S Corp election. So the S Corp election, for it to be considered timely, is due within 2.5 months of the start of the year that you want your S Corp to be effective. So if you wanted it effective January 1, 2025, you would have had to make this election by March 15th of this year. So if you're hoping to do a 2025 S Corp election, technically you still can. You would follow the late relief process. The downside of doing it so late in the year is you're still on the hook for all the compliance as if you had been an S Corp for the entire year. The biggest barrier is getting the payroll component set up. The reasonable salary out of an S Corp can be scrutinized. It's the way that you can essentially control and reduce how much you pay in self-employment tax. So if you were to elect S Corp status for 2025 without a reasonable salary, it could look like a red flag. You also have to make sure you've got your books rebuilt. You would be subject to filing a business tax return for all of 2025. So that means you would need profit and loss, balance sheet to generate that business tax return that would be due early next year. Having the single member LLC is an advantage though, because that is going to be the legal foundation that your S Corp election is layered on top of. So if you formed that LLC, let's say June 12th, 2025, the earliest you could elect S Corp would be June 12th. If it had existed prior to 2025, then that would open the door for the January 1 clean full year. What you can do now proactively is elect 2026 S Corp status and just get started for a clean 2026 and not worry about any of the catch-up compliance, and just proactively elect for the new year. Barbara, can I schedule a meeting with an expert to strategize for my specific situation? Barbara, if you're still on the call, there is a QR code right here in the bottom part of my screen. You are welcome to scan it. It's going to take you to a brief questionnaire to see if you're a fit for collective. And it'll connect you to a phone call with one of our advisors to see if we're the right fit for you. Maritza, can you talk more about what an S Corp is? So absolutely, an S Corp is a tax election that gets layered on top of a legal structure. So a legal structure might be a stock corporation, a single member LLC, maybe you've got partners in a multi-member LLC, professional LLC, professional corporation. All of those are legal structures that are formed at the state level. They're formed at the state level. They give you a legal business name. You get a tax ID associated with it. And that's what creates a legal foundation. There's a separation of business and personal assets. So that needs to exist first. You've got a legal status. Most of our members are either LLCs or PLLCs. Then you add an S Corp election. So this is a separate standalone form. It's from the IRS. It's not made at the state level for most states. And it's basically telling the IRS you want to treat your legal structure different for tax purposes. So many of you may be a single member LLC and then you add the S Corp election. You're actually both at the same time. You would be considered an LLC with an S Corp election. The reason the S Corp election is so advantageous is it gives a solo business owner or any business owner an opportunity to reduce self-employment tax. So if you're a single member LLC, maybe you're a sole proprietor, your default tax status is called a disregarded entity, which means you put everything on the personal tax return and then you pay the self-employment tax plus income tax on top of your entire profit, which generates, this huge tax bill. Then you've got state level taxes. What the S Corp lets you do is it requires you to pay yourself what's called a reasonable salary. And then you only pay the self-employment tax on that salary instead of your entire profit. So the S Corp is a tax selection. It's going to tell the IRS, we're going to report this business activity differently. And through its requirements of paying yourself a reasonable salary, it can also potentially help you reduce how much you pay in self-employment tax. So an S Corp is a tax status rather than a business structure. Heather's asking, can S Corp or sole prop contribute to an HSA? Generally, yes. Again, like health insurance and 401ks and retirements are not my specialty, but generally, HSAs, I'm not an expert, but they can become deductible. They're generally more deductible on the individual side, though you can potentially make the contributions to an HSA through your business. 16 more questions. You've doubled the questions. We're going to keep going. If you have time to stay on, I know we're at time. We can try to get through as many of these as possible. So we're going to carry on. Can you use a SEP IRA or solo 401k as a sole proprietor, or would you need to become a single member LLC or S Corp first? SEP IRA, I feel certain that you can do it as a sole proprietor. It is like the default higher contribution limit pre-tax retirement plan, kind of the default for Schedule C filers. For a solo 401k, I'm not as sure. I'm not sure if you need an EIN, whether it's a sole proprietor EIN or an EIN tied to a legal structure like an LLC. You may need one. I'm not sure. But generally, SEP IRA is going to be available for any type of business structure. Solo 401k, no, is available for a legal entity taxed as an S Corp. I may need to defer and find out how you might need to be structured before doing a solo 401k. Can you share the link to your YouTube? Yes, Sarah, my colleague who puts all of these together and does an amazing job. We couldn't do it without her. Sarah, would you mind posting the link to YouTube in the chat for the rest of the videos? Phoenicia, I recently started private practice work as a licensed therapist. At what earning point should I start an S Corp? I've only been working since August of this year. So usually a legal foundation is going to be your first step. So depending on where you live, that could be an LLC. Some states require a special type of entity. Maybe it's a professional LLC, depending on where you live. And that would be your foundation for deciding, do I stay in LLC or do I add the S Corp election? So first, decide where you live and are you subject to those professional LLC requirements? And that's specific to your license as a licensed therapist. You may have that requirement to set up a special type of legal entity. From there, you can decide if an S Corp is going to make sense based on a number of factors. One is the longevity of being self-employed. So do you want to truly grow your own private practice, or are you actively looking to be an employee of somebody else's? So the length of self-employment, this is again because an S Corp is going to trigger some annual filing requirements. It doesn't always make sense to make the step if you're in between self-employment and regular employment elsewhere. In terms of an income threshold, there is no rule with the IRS on how much you have to make for an S Corp to be an S Corp. Generally, people are looking for a savings opportunity. And so because an S Corp triggers a lot more compliance, it's a little bit more costly to operate. So most folks make the decision when the savings potential is more than the cost to do the extra work. Generally, that can be between 60 and 80,000 of profit. So if you're new, it's only been a couple months in, I would say an LLC could be an inevitable starting point. You may need an LLC regardless. And especially in your line of work, having that liability protection can be advantageous. From there, you may consider 2026 to be the S Corp year if you're going to have a full 12 months of activity. You're going to keep growing this practice. So an LLC for starters, that could happen now. And then maybe proactively plan for an S Corp election for 2026 if your projected income is, within the $60,000 or $80,000 profit range. Bill is asking, which companies would work best to set up a solo 401k? I already have an account at Vanguard for Roth and IRA, but as a first-year S Corp owner, I need to know if this will need to be a separate account. So, Phil, your existing Vanguard accounts, they may be under your social security number. So whether you want to use Vanguard for the S Corp owner, it may still be a new policy with Vanguard under the S Corp's EIN. Vanguard, there's one other, Fidelity. There's the two big ones. One of them offers a really great solo 401k, and I can't remember which it is, but in either instance, it would be a new account because it would be under your EIN. We do have another referral for solo 401k that I will try to add to the email that you'll get after this session. But Vanguard may have this available. It will be a new account under your EIN though. Austin, when we join Collective, do we get a personal strategist that will help with last minute deductions? Austin, that's a great question. So at Collective, when you join, there's a number of resources that you have available. For S Corp members, you do get an assigned account advisor. Really, the advice and the help is really focused on what happens within your business rather than your entire tax profile. So if you have a CPA now, maybe they talk about your itemized deductions and your partner's income and your rental property. The difference between that and Collective is Collective would only focus on what happens within your business because that's what's in scope for our service. But even still, if you are an S Corp member, you can schedule time with your account advisor, take a look at your P&L. Maybe they'll help highlight where some gaps are. Maybe there's a missing deduction on your chart of accounts that's on other people's accounts. And so they can really help highlight what opportunities might fit your industry. Jade's asking, does Collective handle state and sales tax filings too? So we don't handle sales tax right now. We do defer out to a couple partners to handle sales tax. Most of our members are service-based. So in the instance, we do have some drop shippers or some states or localities have sales tax requirements for services. We'll refer out. You would handle sales tax on your own. Our role in sales tax is just making sure you pay for it out of the business bank account so that we can make sure it counts as a deduction on your books. In terms of state filing, we will help you with reminders for like annual renewals for your LLC. Anything that's related to your S Corp filing at the state level would be included in your membership. If you add on personal filing for Collective, it includes one state. If you're a multi-state filer, that would be subject to some extra fees. But generally, state at the business level is included. Sales tax is not at this time. Austin, I currently contribute to 401k and company match through my Gusto account. When Collective does an account takeover, will that mess up? So if you're on Gusto, you retain that existing Gusto account because it's connected to your EIN. So we've got a whole payroll migration process that will help move everything over, but it's going to be the same Gusto account. Generally, it will just mean that you are paying for Gusto through your Collective membership instead of separately, but we would help facilitate all of that. There could be some timing issues. I'm not 100% certain, but with Gusto, I think there is some continuity. If you're switching from another payroll provider, there could be a lag there just from the migration to Gusto, but it shouldn't mess anything up. We use Gusto because it's great, it's easy, it's intuitive, so there shouldn't be any disruption. Wendy, how would paying a 1099 contractor affect me? So if you need to pay somebody as a contractor, that becomes a deduction for your business. Generally, if you pay any individual over $600, that number might go up. You have to issue them a tax form called a 1099. That's not due until January. So actually paying the contractor before year end is to help enable a deduction for the 2025 year. Later, you as the issuer, the payer of a contractor may have an obligation to issue them a tax form, a 1099 NEC. Austin would love a health insurance referral as well. We got it. We'll add these to the list. Sarah, if we can delay our send, if that's possible, maybe we can add a couple things to the email after the session. Is there a difference between single member LLC and Corp with an S Corp election? Or for tax and deduction purposes, they are the same? Okay, so no matter how you're structured, sole proprietor, single member LLC, S Corp, even C Corp, business deductions are business deductions. So your structure doesn't change what's deductible for you. It may change the flow in which something's deductible. So for example, retirement contributions. If you're on a SEP IRA, the way it's deducted on the flow of the tax return is going to look different from whether that's a retirement plan funneling through an S corp. But whatever is deductible, what's considered ordinary and necessary for you to generate income is the same no matter how you're reporting taxes or how you're set up. So for deductions, everything's the same as long as it's ordinary and necessary for your business. Is there a difference between single member LLC and an S corp with an S corp election? So an S corp is not a standalone business entity. If you, let's say, and I know this is true, I think if you go to LegalZoom, they have a button to say form an S corp. If you did that, maybe you did it on Zen Business or some other company, when you do that, what it's doing is it's simultaneously forming a legal corporation. So it's still forming a separate legal entity and then simultaneously doing the S corp election at the same time. So it's still a two-step process. Even if you clicked a button to form an S corp, there's still a legal structure underneath with the S corp election on top. So a single member LLC with an S corp election is going to be the same as someone who says, I'm just an S corp, and you discover that there's an LLC underneath. We've got a great group still on. We're going to keep going for maybe 5 more minutes. There's 10 more questions. We'll see how many we can get through. Jade's asking, if you have 2 DBAs for 2 different aspects of your business, do you have to do 2 separate sets of books for your one S corp, or does it matter? I've seen this a couple times. It depends on how different your businesses are, but if it's one S corp, 2, maybe like there's a service and then a product side of the same business. You may want 2 sets of books to track separately, like from a managerial perspective, how the separate services are doing. In terms of tax reporting, I've seen them just combined because it goes in one column on one front page of an S corp. So from a managerial perspective, to make decisions or understanding which one's more profitable, where should you spend more time, it could make sense for 2 separate set of books. But when it comes tax time, if there are 2 DBAs under the same entity, they're going to get combined for tax reporting. Can you explain needs for S corp versus LLC? And also, can an S corp hold an LLC, but an S corp not hold an but an LLC not hold an S corp? Okay, so does an LLC require the other 2? Does one require the other to exist? So we're talking about like the phases of formation to get to an S corp. So an S corp is a tax election that needs to get layered on top of a legal structure. So regardless of the legal structure you choose, LLC, PLLC, stock corporation, they can all elect S corp status, but the legal structure needs to exist first. Again, the legal structure is what you form at the state level. It's what gives you the business name and the tax ID. So that does need to exist before you add an S corp election. In terms of the needs, so the S corp election triggers a separate business tax return. And so when we think about it in that perspective, what do you need to generate a business tax return? This return requires both profit and loss and balance sheet. So now you've got more comprehensive bookkeeping, where maybe your Excel spreadsheet worked when you were a Schedule C filer. Now you need maybe a QuickBooks or an automated accounting platform that's going to generate those financial statements for you throughout the year. When you switch to adding the S corp election, you as the owner need to take a reasonable salary that's run through a formal payroll process. And so that's why we partner with Gusto. It generates all the payroll tax returns, pay stubs. This payroll, this formal payroll, is how you save and control the self-employment tax through the S corp. So this is a critical administrative component. And then at year end, you file a separate business tax return, whereas a single member LLC, it just gets lumped onto your personal return. So the S corp triggers a lot more administrative work, which becomes more costs, versus a single member LLC just gets lumped into your personal filing. You don't have a need for payroll. Excel spreadsheets probably sufficient for managing your income and expenses for tax reporting. In terms of who can own an S corp, this is a little more nuanced. There is a list of eligible owners on who can be an S corp. Some types of trust cannot be. You have to be considered a legal resident or a permanent resident alien, less than 100 shareholders, 1 class of stock. So we can focus more on specifically who can own an S corp. There are some nuances on like, can an entity own and vice versa. Mercedes is asking, when I set up my EIN, I was told to elect S Corp so that I'm not responsible individually in terms of if the business is sued. But if I didn't pay myself this year, like payroll, let's see, this is my business and probably not an LLC. Mercedes, let me see if I can get back to you on this question. But generally, when you apply for an EIN, it's going to ask you to select your legal structure. I may need a little bit more context. So let me get back to you on that separately. QR code is blocked by the bottom Zoom chat options. Thank you for that feedback. We will move it up. Sarah, if you don't mind posting the link to schedule in the chat, she usually does that. But thank you for that feedback. What is the S Corp election and benefit? So the high level advantage of the S Corp election is it could give you an opportunity to reduce your self-employment tax. And it has to do with the fact that the S Corp election requires you to pay yourself a reasonable salary. That salary is run through a formal payroll process, and then you only pay self-employment tax, Social Security and Medicare, on that salary instead of on your entire business profit. So super high level, it can present an opportunity to reduce self-employment tax. Other opportunities, maybe you're trying to apply for a mortgage and you need proof of income. The fact that you're on payroll will mean you generate pay stubs for yourself. You'll have a W-2 that you can present to your lender for proof of income. You now wear the employer-employee hat. So again, with retirement, making separate employer contributions become a tax deduction, extended time to submit, plus you have the flat 23.5 that you can contribute as an employee. For most people, they're looking for a savings opportunity. Otherwise, some of the other advantages are really more about documentation and kind of leveling up on paper. Can you go from self-employed to an S Corp, or do you need to be an LLC first? So you can be self-employed or considered self-employed with an S Corp election. It really is just because you are the owner of that S Corp, so you're still self-employed. Before you get to an S Corp election, you do need a legal structure like an LLC first. And I'm just gonna do the rest. There's 7 more. If you can hang on, we'll hang on. We're gonna keep recording regardless. Let's see. Am I correct that the minimum income that works for an S Corp is 100,000? What happens if you make a little shy of that in any given year? Say a client needs to drop you or you have a health issue. Okay, so there is no rule with the IRS on how much money you have to make to maintain an S Corp. What's really more important with the IRS is that you keep up with the compliance. So paying yourself a reasonable salary if you're taking distributions, filing those annual business tax returns, making sure your payroll tax returns are submitted. So there is no income limit in the eyes of the IRS for being an S Corp. You can have a loss and have an S Corp. That said, most folks are motivated by a savings potential. And so if your income dips for any reason, usually we see 60,000 as the break even, where the cost of collective is what you save. So in the instance that you make less, the risk is that maybe you're just paying more for support than the savings advantage you get for that particular year. There's also some wiggle room built in within that. Maybe if you lose a client, maybe you skip a payroll run, or you lower your reasonable salary. So you can make adjustments that help with cash flow for the S Corp or help with the savings potential. But the IRS doesn't dictate how much you have to make. It's just really, are you going to break even net of the cost to do the compliance? Helene, if I'm a C Corp single owner, how do I know if I should change to an S Corp? Okay, Helene, this is a great question, and I'm glad you stayed on because, and I hope you're still on, but if you're a C Corp, you default to C Corp taxation. This is the structure that pays a separate corporate level tax. It's 21% at the federal level, and then the state levels may vary. But this structure, a C corporation, pays a corporate level income tax, and then the owners pay tax again on the dividends they take out. So this is the structure that's really tied to that true double taxation idea. Generally, if it's a single-owned C corp, I would say adding the S corp election is probably the most common path, where it's going to create that pass-through taxation where it would potentially eliminate the whole C corp double taxation, the corporate level tax. And instead, you as the owner pay the tax at the individual level. You pay yourself a reasonable salary, and then that gets to control the Social Security and Medicare tax. Assuming you are the only owner, you're an eligible owner to be an S corp, you're a permanent resident alien or a U.S. citizen. There's no barriers to you adding an S corp election to your C corp. In terms of collective, we can only support LLCs that add the S corp election, but Helene, in general, you can explore the S corp election for your single-owned C corp. What kind of compliance is needed for an S corp? What does it cost roughly? So collective bundles the maintenance. So monthly bookkeeping, subscription to payroll plus support setting it up, filing a separate business tax return for $349 a month. Usually you'd have to piece together, the cost of QuickBooks plus a bookkeeper if you don't want to do it yourself, the cost of Gusto, then maybe some support to get that set up, then separately a CPA or an accountant, or self-prepare that separate business tax return. So the idea behind Collective is that the cost, it's a little bit more cost effective. It's one subscription. It's all kept in one place, and it's one login. So it's pulling together all these different services that would otherwise be piecemealed into one platform and one fee. If I have a solo LLC in New Hampshire, which doesn't recognize S corp elections, but do a large amount of business in other states, could an S corp election make sense? So this person is asking about some barriers at the state level, but that's not to say there couldn't be opportunities at the federal level to still control and reduce your self-employment tax. Social Security and Medicare is dictated by the IRS at the federal government level, so your S corp could still be recognized with the IRS. For New Hampshire, I may have to do some more research. Sometimes some states have a separate S corp election, which means it doesn't just piggyback off what you do with federal. So in terms of the state treatment for New Hampshire, I'm not entirely sure, but there could still be an advantage for the federal S corp election. Do you have a level of services that is more affordable for businesses that are building up, or do you have a menu of single services? So we're all in one as of now, but Jade is asking a great question. Collective is about to launch a brand new tier, specifically for people who are still operating at the LLC level for any reason. Maybe you have a high earning role and your salary or a S corp election doesn't make sense. There aren't a lot of savings opportunities. Maybe you live in like New York City where being an S corp is not that favorable because there's a lot of S corp level taxes. So Jade, if you are somebody who's really comfortable at the LLC level, there is going to be a solution for you at Collective very, very soon in the next couple weeks. It's going to be priced lower than our $349 a month. And again, it's still a bundle of services. We don't have a la carte right now, but for the single member LLC members who join, we can help with the LLC formation. We'll do monthly bookkeeping for you. Invoicing is included, and then we'll prepare your personal tax return so that Schedule C is generated and included. What if you've been putting all of your income back into the business and not paying yourself a salary? So Jade, another great question. And I like how you phrased this. A lot of people ask this question or say it in this way. I put all my money back into the business. What is that really saying? If you're reinvesting back into the business, you're paying for business expenses. So whether that's marketing or a videographer or a new website, those are business deductions. So if you're putting all your income back into the business, you're also creating more deductions, which is going to lower your business profit. If you're set up as an S corp and you have profit and you take money out of the business to use personally, this is what's called a distribution, where you just transfer money from business checking to personal. When you're an S corp owner, you take a distribution without a salary. It can look to the IRS like you're completely avoiding the Social Security and Medicare tax. So if you're taking a distribution, it can be very risky to not also take a salary. It can look like tax avoidance. So if you're an S corp already, Jade, I would recommend getting a payroll solution set up as soon as possible to get that payroll compliance in place, and it can be, effective now. What are the key differences between a SEP IRA and solo 401k? I am going to defer to a session that we will put together as soon as possible for retirement plans and bring in a specialist to talk about this. High level, these are both higher contribution limit pre-tax retirement contributions. The main differences can be in who contributes and the deadlines to contribute. But we will get you some more resources on retirement because that is a hot topic. How can I switch a newly formed business with no revenue yet from an S Corp to an LLC? So Lay is asking, she's already elected S Corp status. Can you revert back to an LLC? Yes, you can revoke an S Corp election, but there are some downsides. When you revoke an S Corp election, it defaults to C Corp tax treatment. So you'd have to proactively file another form to go back to the regular single member LLC tax treatment. Separately, the IRS will prevent you from re-electing S Corp for 5 years on that same entity. So if you just elected now prematurely, and this year is still the startup year, but 2026 is going to, be the year that you start gearing up, it may not make sense to revoke it. Maybe it's just a year where you have more costs to maintain the S Corp than any savings advantage. But if your goal is to grow this business and it just doesn't have revenue yet, there's no issue with being an S Corp. And if you revoke it, it can prevent you from re-electing in the future. Is there a difference for savings potential if you are a single member LLC with S Corp election versus C Corp with S Corp election? Assuming that you make the election at the same time. So if you exist as a C Corp, I think Helene, this might be you. If you exist as a C Corp for a period of time and then switch to an S Corp, there are some tax nuances there that I haven't spoken to in a while. So there are some differences there, but generally, when you add an S Corp election, there is no difference in savings potential. You're still triggering the requirement to pay yourself a reasonable salary once your S Corp election is approved, whether you're starting out as a single member LLC or as a C Corp. So it's still the same control over Social Security and Medicare tax. If my business is a bookkeeping business and I don't need that bookkeeping service, just the tax side, do you do that? Unfortunately, we do not have a la carte services yet, but we do support a handful of bookkeeping or bookkeepers. Everything is done on our collective accounting platform. So everything is included both on the in-house bookkeeping side, we'll categorize and reconcile for you, and it's all done on our in-app or in-app platform. And we got through it. Amazing. Thank you so much for the participation. Thank you for the 50 people still on. Great questions. Truly do appreciate it. We will do our best to add the retirement resources to the email we send after. Link to schedule is in the chat, as well as the link to our YouTube channel. And we will see you next time. Thank you.